to be the case, right? With America being the leader, especially in financial markets and stuff like that. They kind of set the trend almost, and then it's like everyone else kind of follows suit. So I think what's happening at the moment, my personal view, the other guys might have a slightly different view, is that I think a lot of the attention is on the Fed and obviously Powell speaking next
All
week.
right. Ben, sorry for interrupting you. I just noticed that our stream just went live right now. So I would like to once again welcome everybody to the stream. Apologize for the mistake. We're still learning how this goes. We're gonna get through. We're gonna get better as the time goes on. Please let us know if you can hear us well, if the sound is all right, if you can see us properly. Let me introduce my co-hosts today. Under me is Bruno Perinelli from Argentina. To my right-hand side is Ben Sparham from the UK, and in the bottom right corner, Jake Torres from the Philippines. Welcome, guys, today. How are you doing?
Doing good, thank you. Yourself?
I'm all right.
Wonderful to hear.
Hello.
So then let's get into the main topic of today. It's analyzing what happened in the markets over the last week. Now, the first thing that I would like to discuss with you is the rate hike on RBA by 25 BPS. So I would like to talk about how's that going to affect the Australian dollar moving forward through this week.
Yeah, so I can get started with that one. It's been quite interesting to see that FX has been quite slow this week. Most of the major currency pairs, anyway, that we focus on haven't really had much movement to them. They've been quite range bound for the most part. And it's interesting to see that the Aussie dollar has obviously stayed in tune with that. Basically, it hasn't really moved much despite the rates decision over there. And I think a lot of it comes into the fact that there's so much attention at the moment on what the Fed are doing over in the US, because economically and just the way that the world is kind of set up, and the US being the number one basically in financial markets, etc. It tends to generally be that the Fed kind of set the trend, and then other economies kind of follow suit. Other central banks tend to follow suit, right? So for me personally, anyway, the other guys might have a slightly different view, but I think the lack of reaction to news events such as that really comes down to the fact that we're all waiting to see what the Fed's next movement is. So we've obviously got that next Wednesday, and Jerome Powell speaking then, along with some CPI data, which we'll speak on in a second. But I think that's really the main focus at the moment. What about you, Bruno? You see anything similar, or you got different views on that?
Yeah, I completely agree with you, Ben. I think what the Fed says, what the Fed signal us, that's going to influence what the investors will do next. I think there are two numbers that we knew this week that are very important. First of all, the labor productivity increased more than expected in the United States. Also, the cost per unit grew less than expected. It's just 2.4%. I think around 0.7 percentage points less than expected. So that takes some pressure out of prices, and that could lift the chances that the Federal Reserve won't lift the interest rate more than what is expected. It is expected around 50 and 125 points hike during the next 12 months. So I think that will influence where the FX pairs will go next. I mean, I agree with you, Ben, in what you were saying first, that the FX market is a little bit quiet this week. I think because the FX pairs are in a critical level. They have reached, they bounced quite a lot. The euro dollar, the pound dollar, also the Aussie dollar, which is quite related. There's a big correlation with the risk assets. So there are just, I think investors are waiting to see bigger signals that inflation is taming in the United States, to see to demand more major and minor currencies.
Yeah, it's been interesting to kind of see how things have shaped up so much. It doesn't seem that long ago. I mean, if we look at the British pound, for example, and when we had everything going on with when Liz Truss came into power and the whole shenanigans that kind of took place then, we were talking about, is the pound going to reach parity with the dollar? What's going to go on with that? And now we're sitting there looking at, GBP USD sitting around about 1.2. All that, it's completely reversed the course. And obviously with the way that the dollar's pulled back in recent weeks, as you said, I completely agree with that. We're at quite a critical point. Does this become now the start of something bigger in terms of a full momentum shift from that long-term trend we've had? Or is it a case of it's quite an extended pullback and then maybe we get a bit of a recovery soon? I mean, what about you, Jake? What are your thoughts on the dollar and where we sit currently in FX?
The dollar or the AUD?
So with the US dollar and FX in general.
Okay, in FX. First, I will make my insights with regards to the question of Oliver with the latest RBA interest rate decision this week. If we observe, of course, they just delivered as expected by 25 basis point, and if we observe how the market reacted out of that number, so we can really see that the reaction is just it is not that volatile. It was a calm environment. So one of the reasons that we can probably attribute is of course, the 25 basis point is already priced in. So it is just what the market is already expecting. So there was no surprise. So basically, normally, as far as of course, one of the trading plan that I do when I trade with the news is the surprise number. So when there is no surprise, of course, we are not expecting some volatility. In the medium term, my personal view for the AUD is it will be affected by the current theme now in the COVID, COVID zero policy in China, because of course, economically speaking, these two countries are trade partners. The large portion of export of Australia goes to China. So when there is a negativity happening in the Chinese economy, it affects the Australian economy. But there is an ongoing theme now. It's starting to develop that China is beginning to lift some of the cities there which is being locked down. So that is something might give some strength for the AUD also. But of course, it is the ongoing theme now with regards to the Chinese economy is just an infant. So it is still yet to develop. So that is worth to also keep that on our radar, the development of Chinese COVID situation.
Well, thank you, Jake,
So
for
on the
that
entire,
insight.
yes.
Now maybe the second thing that I would like to touch on. We saw the BOC hike rate from the Bank of Canada. How do you guys think that will affect the Canadian dollar moving forward?
Let's start. Let me start first, and then Canada is one of the most gold and silver exporters. I think that as the Bank of Canada and the other central banks are lifting its interest rate, and on the other hand, the Federal Reserve is expecting to do the other way, or trying to ease a little bit, that could lift the demand for these minor currencies, in this case, the Canadian dollar, previously the Aussie dollar. I think now, as we are heading to lower interest rates in the United States, that could lift the price of gold and silver, and that could also help the Canadian dollar to go up.
Yeah, no, I think that definitely makes sense what you're saying there, Bruno. Again, I think it's kind of like a similar situation to what we were talking about there with the Aussie dollar, right? Is that, in normal, for lack of a better word, conditions, we look and focus quite more on what individual central banks or individual economies are doing, expanding, contracting, etc. I think where this seems to be such a kind of global issue at the moment in terms of inflation and everything that's come off the back of the pandemic, and then central banks, almost in line with each other for the most part, there is really that kind of general theme here across the board of, right, what do the Fed do? How does that then shape things up? How do we need to react off the back of it? It almost feels like, for the most part anyway, that a lot of places are kind of, just more reactionary. And what I found quite interesting, like you touched on gold and silver there, is that we haven't really seen those commodities move much, right? If we look at where gold's sitting at the moment, its performance over the last 12 to 24 months. And even if you look at its long-term trend going back over the last 50 years or so, we're pretty much sitting right around kind of mean performance. And over the last 12 months, I think it's pretty much flat, maybe a couple of percentage points either way. It's not really moved in the same way that you would expect, given the inflationary environment that we've been in. Does that make sense?
I'm kind of disagree with you in that, Ben, because there's negative correlation between rates and gold and silver, because as the rates go high, then the cost of keeping the gold and silver ounces are higher. So you can expect less demand for gold and silver. But as rates are going downwards in the United States, we're seeing that the 10-year bond yield went from 4% and now it's at 3.40. We had a big rally in silver that went from $18 to 23, just a matter of months. And also in gold, it went from $1,600 an ounce to $1,800. Is that right?
Yeah. That's very true. We've got quite a unique environment at the moment, right? Because if you just took inflation on its own, you'd go, well, commodities and gold and precious metals, etc., should all go up. But then, as you said, that you've also got the added mixture of interest rates and stuff like that. I mean, Jake, what's your kind of views on commodities at the moment, and obviously bond yields as well, which Bruno touched on there?
Well, commodities in line with of course, the Canadian dollar. So the Canadian dollar is a high beta currency or commodity linked currency, which is also when I establish a trading idea with the CAD, I also look at the oil market, because there is a positive correlation with the Canadian dollar in the oil market. So when the oil is going to the upside, also there's a possibility that the Canadian dollar being a link to the oil, being one of their biggest export is oil, so that will affect the Canadian dollar currency. On my medium-term view for the Canadian dollar at the moment, so it was quite surprising for me actually personally when the BOC hiked by 50 basis points, because when I see how I look at when there's an incoming interest rate decision, I look at two expectation, and what we call the economy side and the rates market side. So there was a conflicting information based on the probability, based on the expectation. And the rates market, actually, they were expecting that the BOC will be hiking just by 25 basis points. And on the economy side, mostly what we saw in the forecast of the trading view calendar. And the economist side, they were expecting that their forecast is the BOC will be hiking by 50 basis points. So that is what happened. And even though if you look at the entire numbers, actually based on the number itself, 50 basis point hike for a central bank is quite hawkish. No, that number is hawkish. But if you look at if we see I was really quite surprised, because the market reaction is not really that in line with the actual print of the BOC, which is 50 basis points. When good news is when good prints is happening, but there is no a follow through with the price action. No, there is the underlying sentiment is telling us something. So my overview for the Canadian dollar is still bearish, and also in line with the commodity. In connection with the commodities, the oil market, the WTI is also making some breaking new lows, breaking significant level. So that is my medium term for the CAD, and also the overall language from the BOC chair they will be data dependent with regards to their decision on their next policy meeting.
Makes sense. So looking forward to next week then, guys. Obviously, this week's basically done and dusted now. I know we've got some PPI figures later on today. We touched on the fact that we've obviously got Jerome Powell speaking next week, but we can't obviously have a market discussion without talking about the fact we've also got CPI next week as well. So What are your thoughts with regards to inflation? Do we think inflation has peaked? Do we think we're going to see a continued trend now of inflation starting to fall, sort of month on month, year over year? What are your thoughts on that, Bruno?
I think inflation peaked some months ago. There are some signals that inflation is taming throughout the world. First of all, commodities absolutely plummeted throughout this couple of 3 months. So actually, throughout this last 9 months, when the Federal Reserve decided to start its aggressive monetary policy, and also there are signals that the economic output, worldwide economic output, will grow less at least, and it can get into a recession next year. So that will probably affect rates and prices in the end, and employment. There are huge odds that the global recession, is probably happening in the first half of 2023. So I think that will hurt inflation, prices, and the worldwide economic output also.
Thank you for that, Bruno. I just want to touch up on one last topic in this stream as we're nearing the sort of end of our time today. And that is, guys, for the traders that are watching this on Monday morning and email blast, what are the most important events of the next week that they should be careful and know about?
Yeah, so I would say it's, kind of links back into what we've been discussing there in terms of, the CPI data, which I believe is Tuesday, if memory serves me correctly from the calendar. And then Jerome Powell obviously speaking on Wednesday. I think those are going to be the main focuses. It seems like forever now we've been talking about interest rates and inflation, and it's almost becoming a bit boring for investors probably to kind of hear about that, right? But that is the main driving force at the moment still in markets. So I think if we create a couple of scenarios here, right? If we see inflationary figures continue their slow decline, and if we then get some quite kind of positive talk or positive language from Powell on Wednesday with regards to rates and stuff like that and their plans moving forward with slowing down, as is what the market is expecting, we could see a big positive reaction off the back of that. I think if anything other than that happens, we could see quite a heavy decline in the likes of equity markets and the SP 500, etc. And the reason I say that is because the recent rally that we've had has been very pinned on the idea, yes, inflation is falling, rates are going to slow down. And if we get anything that maybe disrupts that story, if you will, you could find people reacting quite aggressively to that and saying, oh, right, okay, maybe the story isn't, I'm a little bit wrong, I'm a little bit early on the story, maybe bailing out of any long positions, things like that. And we could see a bit of a move to the downside. But what about you guys? What about you, Jake? What's your thoughts on that?
For the next week event, of course, we have the Fed meeting and the inflation in the US. And how we can prepare that, probably we can use for today's PPI from the US, because that also helps with the inflation numbers.
Yep.
That will also help us to have at least a glimpse of what will be the possible numbers for the CPI. And if we, of course, as of the moment, of course, honestly, I don't know what will happen. No one knows what will be the print. No one knows. But how we can prepare is, of course, basically, the basic thing that I apply is I always look at if, of course, the inflation, we have the core month on month and year over year. And we have the headline CPI month on month and year on year. So looking at the technical level, we can see now that the USD in the index level is very attractive level. It is at the support level. Okay, so if we see some surprise, let's say for example we have a surprise, a beat or a green numbers across the board, the headline and the core, that will be a good catalyst to buy the USD at market. Okay, given that the technical levels now for the the dollar index, so not just the dollar index, but also the Euro USD, they are very technically attractive to buy the US dollar. So of course, for me, if we get a mixed number, of course, that basically we don't have an edge there. So that is just how we can prepare for this incoming CPI. And of course, the CPI print will also be the Fed we'll also be considering the CPI print because that will be released prior to the Fed meeting.
Okay,
absolutely.
wonderful. How about you, Bruno?
I think we can see a turning point on Wednesday because if the inflation number comes below expectations, and on the other hand, Jerome Powell, increase the fears of a recession, we could see that the correlation or the negative correlation between the DXY, the dollar index, the US dollar, and the stocks may be broken because that could trigger some risk-off movements towards bonds, silver, gold, and against stocks, because that could trigger those recession trades instead of what we're seeing that when the dollar index goes down, then the stocks and bonds and commodities go up. I think it could be a turning point what happens on Wednesday.
Wonderful. And do we have any questions from the viewers to end our stream with? If you guys want to know anything, if there is any particular currency or a pair that you're interested, feel free to leave that in the chat and we'll get to that towards the end. In the meantime, I would like to thank all of you for joining today. It's been a wonderful pleasure having you here, and all of our viewers can once again join next Friday. We're gonna be live once again, 11 a.m. London time, streaming from here. So I'm not seeing any questions in the meantime, so I think we'll be all good there. And I wish you guys all a wonderful day. Have a great one.
Yes, thank you. Happy weekend.